Welcome. In this video, we will talk about a company that gave a good profitable trade opportunity. This stock belongs to a group that has been widely talked about today for the damages that the group has done to the markets in this week. If you have been able to guess the stock right or group right, it is Adani Group that we are talking about. The challenges of Adani Group has been blown out of proportion now. If you have been an investor in this stock, you will be going through a severe pain due to losses and be in a cursing period, right? Adani Group as a whole has very less liquidity in their stocks, mostly owned by the promoters, very few retail investors. Mutual funds have totally shied away from this stock or group altogether. That's also one of the reasons why mutual funds as a whole were not able to perform above the large cap benchmarks today. Adani Group has about 8% exposure in the Nifty and Next 50, the large cap indices of India. And if funds don't have this 8% in their portfolio, and this 8% has done exponentially high returns in the last 3 years. So if a portfolio does not have this big set of stocks that have done extremely well, obviously they are not going to have a bigger returns, right? That's what happened to mutual funds. While today, in hindsight, of course, all of them are happy that mutual funds did not have these stocks because of the challenges that this sector is going through now. Today, when Adani Group, there's not only the 8% that's been gone into problem, along with the Adani Group, we are also having the finance sector, which is having a challenge today because of their exposure in Adani Group's debt. That's talked about, like 30% of Adani Group's debt is financed by the Indian banks. So banking sector has about 21% exposure. Banking and finance has about 21% exposure in NSE 500 index. PSU banks separately have 4% in the NSE index. So these banking sector also have gone through more than 5% correction in the last week, while Adani Group has gone through a 20% plus correction. So at this time, there will be two thoughts that is doing rounds in the investor's mind. One is, good that I or my mutual fund portfolio doesn't have Adani stocks, so we are not going through losses. The second one is, was there an opportunity to make some profits from these stocks that gave exponentially high returns in the last couple of years? So today, as we are talking about the Adani Group, the performance that these stocks made in the last 3 years is superior. Between 2019 to 2022, the last 3-year returns from Adani Group stocks were between 63 to 1,700%, while the index in the same period gave only 43%. Such a big significant growth these stocks had. If you take the peak returns, they were between 170 to 2,360%. When we see this return, mind will think about, what if there was an opportunity for us to make some portion of this big gains these stocks gave as returns in their heydays? Was it a possibility? If you have followed a process to invest, obviously there would have been a chance to get an entry and make profit from these stocks. Like that, we have a process. Through our process, it's called the SRR stock ranking report that we call. Through that report, we identify stocks that have both earnings and stock price returns, that is higher returns, has a ranking. Those stocks that come in the top 20% of the ranking go on to become the best stocks in the market. Like that, in our stock rank report in the last 3 years, we had 2 Adani stocks coming at the top 20%. One was Adani Green, which came in 2019. At the time the stock came for a buy, the stock was at around 140 rupees. Today, even after the big correction, the stock is at 1,500 rupees, which is about 10 times returns from that investment what was done in 2019. Of course, we had an exit very early and at a higher price itself. The next stock that came very recently in 2022 was Adani Power. So let's talk about Adani Power stock, where it gave a buy, when it gave an exit, was it profitable? Adani Power on its rank journey. This is the earnings and its growth for the stock, both on quarterly and TTM is trailing 12 months. So orange line is the quarterly earnings. Before 2020, stock was not doing good. It had negative results. Losses were there. December 19 was loss. March 19 was loss. March 20 was loss. June it started coming up. By September 2020, it had a good 2000 plus crores of profits. That even pulls up the trailing 12 months, which is the TTM. That's the blue line. But after that, again it sinks back to negative. About 3 or 4 quarters, it still holds at the break even. No great numbers. But because of this one good profit growth numbers and subsequently holding on to the top, trailing 12 month earnings started going up. And after that, again in 2021 end, it goes down below. Then by December 2021, it starts giving a good result. Quarterly goes up. That supports the trailing 12 months. It pushes up even further. But by March, again it kind of holds at the same place, the about 4,000 plus crores. Good growth this was. That's why ranking also went up. This grey line is the growth for TTM. It was negative below, even minus around 600-700%. Then subsequently it started gaining up as the results started going great at the top. TTM growth, also TTM GR growth, earnings growth has gone up significantly. But here we can see by June 2022, results started going down. This is where the stock went weak. Let's see the rankings for the stock. This is the rank for Adani Power, both on its earnings. Orange line is the earnings rank and green is the price rank. Price rank is the stock price percentage gain in the last 1 year against all other stocks in the market, which is the topmost, or top 20% comes here. When it ranks above 80, that means that stock is in the top 20% of the growth among all the stocks in the market. By 2021 March, price rank went above 80, but earnings rank was below 80 itself. So by March 2021, when the company gave a good result, earnings did move up, but it was shy away from 80. Then afterwards, we had seen all the negative results that again brought down the earnings rank close to 20, almost at the bottom. But this period, stock price remained constant at the same level. That kept the price rank for the stock also at the top, oftentimes coming down below 80 and going up. But when December 2021 results came, it started giving good run. Earnings started going up, but still it was far away from the top rank, that is above 80. But when March 2022 results came, it was somewhere around April that was published, and that was a game changer or the turning point for the stock. It started moving above 80. This is a place where earnings rank moved above 80, and that time price was already significantly gone up. This is what happens most of the times. Don't know if it is insider information or what, but before the results come, good stocks tend to have good rallies. That's what happened here. Post the ranking, both the earnings and price rank being above 80, it triggers a buy. This is where we had a buy. After that, it had a small drop. Again, it started going up. Then a small correction. This correction helped us add more, because when both the ranks are above 80, that's a good time to add more to the stock, because there is a confirmation that this stock will do well. And subsequently, price did move up. Significant rally it had, but by the time it came to the top, post the June results was not so great. That put down the stock down. By the time there was some weakness here in the patterns that we will see in the chart, part sell happened. After that, it formed a support here, and that support broke, giving a full exit. Let's go to the chart. We are seeing from the period where the earnings rank, price rank went above 80. Price rank went above 80, and after that, price kept continuously holding at the tight range, very tight range. Then following the earnings rank, when it comes here, it was at 89. Earnings rank came at 89, but high was not broken. Next bar high was broken. The entry came at 292 rupees. After that, price did have a small hold on there, sideways correction, and then it did have a good correction coming to the value zone. This between two moving averages is what we call the value zone. That is an attractive place to buy. It didn't go inside the value zone, it just touched the value zone and started going up. This place we could have added. Suppose we want to buy 100 shares, buy 50 shares at the time when the ranking goes up, then wait for some correction. Why we do this is when the prices already run up significantly when the ranking is coming, good to have 50% exposure and buy back when a correction happens. This sometimes may happen, sometimes may not happen. If it doesn't happen, we run with the 50% position. If it happens, we add more. That is an advantage. Here in Adani Power, we had that opportunity to add at 267. Of course, about 30 plus points lesser than where we bought the stock first. That averaged us at the lower side. Then as the stock went up, following its good results subsequently, weakness developed. This was a bearish divergence on the histogram and bearish divergence even on the MACD lines. Where this was a part sell. After the divergence, it's not good to hold big positions. Good to cut, make some profits. 50% of position can be exited here. That's what happened at 370. After that, correction continued. There was a support. Any price penetration below the moving average is a support. It came at 315. After that, within 4-5 weeks time, that support got broke and price at 315 had a full exit. This is starts here. Average buying price 279.5. Started to buy in May 2022. Average sell price was 342.5. Sold fully in December 2022. Profit made is 63 rupees on the investment of 279. Gain was 22.54%. Holding period was 7 months. So this happened well within the period where the stock had a good journey on its growth, earnings growth, and it completed its exit also with fairly good profit. This is how, using a stock rank report, we buy the best of best stocks, hold them till the growth continues. When it gets weak, start moving out. There are some stocks which holds for like 2 to 3 years also. Some stocks which fail immediately after a breakout or a signal and then turn down. That also happens. So we don't mean that all the rank qualifying stocks end up giving great returns. We will have losing positions also, while there are some which gives like 300-400% gains also. Adani Green in that manner gave around 600%. I didn't take it here because that was a 3-year-old story. It's good to have something new. That's why we spoke about Adani Power. Again, this stock still it is in the ranking. You can see the ranking is above, near to 100 on both earnings and price rank. But to buy the stock, we need to have price move above the moving average. So here there is no supports and trend is off. Stock is not trending now. When the stock came to ranking, it was in trend. Now it's all gone. So though there is ranking available for the stock price is not great to buy. So that's why as of now, Adani Power, though it is qualified at top ranks on both earnings and price, need to wait for a resistance here to get formed above the moving average. Price should come above this, form a resistance, then go down. After that only it will give a buy. Chances are by that time all this development happens, there can be bad results and even the rankings can drop. So using ranking, we can buy great stocks which otherwise is impossible to identify in a universe of stocks that's there in the market. Also, we are not recommending any buy here. We are just showing an opportunity that had passed in a stock which had beautiful run, and it was a qualifier based on its profit growth. So there was no speculation here. Similar kind of opportunities are today available in PSU banks. You can have the rank report from our website through a platinum subscription. Wish you a wonderful journey, making a lot of profits, investing into stocks, buying the best ones and reap the biggest returns as they generate time and again for investors. Thank you.